Hello everyone, welcome to EduTap. So today we are going to start with our company law revision, mega revision series, and we are going to do this mega revision series for the company law with the help of MCQs, right? So we are going to discuss 25 MCQs in today's class. And see, in the company law, good evening everyone. So in the company law, what happens? This is the only subject in which even if you haven't studied anything, you can get good marks through the help of reverse engineering or through the help of MCQs. Though it is not recommended to only go through the to only study company law with the help of MCQs, but this is the fact. Other than the company law, there is no subject in which you can directly attempt the MCQs or you can get hold of the facts through the help of MCQs. But in the company law, you can do that. Because what do we have in the company law? The Companies Act 2013 contains the provisions, clauses, right? So in form of MCQ, you try to get hold of the underlying provisions and clauses and you just try to remember it. That's the only thing, right? Okay, good evening everyone. So now we are going to start with the first question of the day, and first of all just confirm me everyone that my voice and the video quality is absolutely fine to everyone. Then I'll move ahead with the first question of the day. Okay, now the PDF of this session you will find it on the YouTube channel, and this is going to be the interesting class because even if you haven't studied anything in the company law, then also you can watch it. So for other subjects like commerce and accountancy, costing, I could not say that because to attempt MCQs, you should have the basic understanding of the underlying concept, right? But in the company law, what you can do, even if you don't know the answer, in the explanation part, just try to remember the provision or clauses we are going to discuss together, right? Okay, the PDF you are going to get in the Telegram channel. You can join that. Okay. Now, a private company cannot issue shares through what? Right issue, bonus issue, public offer, private placement. So you have to tell me the answer. Ki a private company. So a private company is any company. Basically, in the law's definition, I'm telling you this thing. Ki a private company is any company which is not the public company, right? But now, what is this public company? Public company is any company who can raise the funds through the public, right? So private company cannot issue shares through what? A right issue. It can share it from the right issue. So this would not be the answer because the question is asking to you cannot, right? Then bonus issue. So private company can issue shares through the bonus, but it can't issue shares through the public, and it can do through the private placement as well. So the correct option would be option number C. And as I can see, each and every one is correct. Rudra saying, sir, where can we get the summary of Companies Act rather than the whole document? If you are the enrolled student, you would have got that, and if not, then you have to prepare your notes, right, Rudra? Okay, let's move ahead. Let's do some explanation part as well for this particular question, so that even if you don't know the concept or the clause, you should remember it right now while we were discussing the whole class, right? So a public company is going to or may issue securities. Securities mean the shares, right? In this case, through public offer. Public offer means from the general public, it can raise funds, right? Through private placement as well. Now in the private placement means you have selected group of people, and by issuing shares to them also, you can raise the funds. So this is what private placement is. Now, right issue and the bonus issue. So public company can issue the shares through right issue. Right issue means when the company is going to issue shares, further shares to the existing shareholders, then we call it right issue. And this right issue is basically done on the price less than the market price usually. And bonus issue are those shares which are being issued to the existing shareholders for free. There is no, we are not receiving, as a company, we are not receiving any payment for it, right? Okay. Now, a private company can issue the securities through right issue and bonus issue, that they can do. Plus, they can issue through private placement, but not through the public offer, right? Clear? Everyone is clear about this. Okay. Now, second question. For companies, for dash companies, matters relating to issue and transfer of securities shall be administered by the SEBI. Now, it is asking to you, for which type of companies the matters which relates to the issue of securities and the transfer of it or transmission of it will be administered by the SEBI. So for the listed companies or for the companies that are intended to get themselves listed, so you know SEBI is the regulator of capital market, right? And SEBI is going to regulate all the listed companies, right? Isn't it? Now, companies intended to get themselves listed, unlisted company with net worth of more than 500 crores, both A and B, both A and C, all A, B and C. So let me check the chat section first of all. And who all of you are correct? Let me check. Everyone is correct. For 2, answer would be option number D, and I am really proud to see this, right? So listed companies or the companies who want to get themselves listed. Now let's do the explanation part as well, so that even if you don't know the answer, so with me you have to, whenever we are discussing this, you have to remember each and every clause we are going to discuss. Okay? Though we are not going to discuss about the exact section number, but what is the exact clause or provision, we are going to discuss that in detail throughout the class, right? Okay. So listed companies or companies who intend to get themselves listed, basically for them, the matters which are related to issue and the transfer of securities will be dealt by the, or it will be administered by the SEBI, or we have the matter of non-payment of dividend in case of listed company or the companies who intend to get themselves listed soon. For both of them, it will be administered by the SEBI. But other than these two cases, all the other matters will be administered by the central government, or you can say registrar. Registrar is what? ROC, Registrar of Companies, through the MCA. They administered that, right? Or through the tribunal. And for other companies, so companies except listed companies or the companies who intend to get themselves listed, other than those companies, all the matters, please remember this, all the matters will be administered by the ROC through MCA, and you can also call it central government or the tribunal as well. Clear? This much clear? Okay. Let's talk about the question number 3. It says, when a company is issuing securities through issuing house. Now, what is this issuing house? Like we have the investment bankers, we have the brokerage firms, right? So through which, when we try to raise funds, we are not directly issuing prospectus to the public. What we are doing, we are a company, right? So what we are doing, we are first approaching the investment bankers or the broking house, and we are telling them, okay, we are going to issue shares to you. What you do, you further make it public, right? So this is what do we meant by the issuing house. So question says, when the company is issuing securities through the issuing house, the document issued by the issuing house, the document issued by the brokerage firm or the investment banker shall be deemed to be a prospectus. So now issuing house is issuing the public, they are issuing the shares to the public. So whatever document through which they are issuing the shares, that will be deemed to be a prospectus. What do we mean by this deemed to be a prospectus? Deemed means it will be considered to be a prospectus. It is not the actual prospectus, but from the law's point of view, it will be considered as a prospectus, right? Now, it happens only if certain conditions are satisfied. It says only if issuing house allots or offers to allot securities within dash of agreement with the main company. Now first let's understand about all the underlying concept, then we will get back to the question. Though the answer I know, you all know this thing, but who don't know, let's talk about first of all the concepts, then we will look at the conditions, then we will see the answer of this question, right? So this is the main company and this is the issuing house, the broking company, or we can call them underwriters. So through which this main company is offering their shares to the public. They are not doing this directly. Through the issuing house, they are doing it. So whatever document like this IDBI bank is going to issue for to raise fund basically. So this will be deemed to be a prospectus. But now these public obviously will be the holder of this main company. They will not be the holder of IDBI bank. They will be the holder of the main company, right? But there are certain conditions that must be satisfied for that. Conditions are that conditions for a document to be called a deemed prospectus. First condition, issuing house, in our case it was IDBI bank, issuing house allots or offers within 6 months of agreement with the main company. That means कि this IDBI bank within 6 months of getting the agreement with the main company offers shares to the general public. So it should be done within 6 months. Issuing house allots or offers within 6 months. So this is what question was asking to you. Within how many years, days or months of agreement with the main company if the issuing house allots it? So answer would be option number D. But this question is a single question, but from this particular topic more questions can be framed. So we are going to discuss about all the conditions that needs to be satisfied, right? Don't worry. So first condition we have discussed ki 6 months. Now, or whole consideration is not received by the company before offer is made by the issuing house to the public. Now it says this company, see, first condition is satisfied, or it says or, right? So you don't have to basically comply with both the conditions. Even if one condition, even if the second condition is satisfied, it will be a deemed prospectus issued by the issuing house, right? So what is that second condition? It says कि when this main company is issuing shares to the broking house or IDBI bank, they are not receiving money or consideration before the offer made to the general public by this IDBI bank. Got the logic? So this main company is not getting any consideration from the broking house, from the IDBI bank, before this IDBI bank offers these shares to the general public. So if any one of the condition is satisfied, we will call this document deemed to be a prospectus. Clear enough? Okay. Now, what is the effect of deemed prospectus? Why we are considering it a prospectus? Because whatever laws, whatever provisions are there with respect to the prospectus, all will be applied for the deemed prospectus as well. That's the logic. Okay. Let's come to the fourth question of the day, and let me check who all of you were correct in the question number 3rd, and everyone is correct. Okay, that's good. No prospectus. Fourth question number 4th. No prospectus shall be valid if it is issued more than dash after the date on which a copy thereof is delivered to the registrar. So basically it is saying कि when you issue the prospectus, now you have to deliver a copy of it to the ROC. ROC is Registrar of Companies. So what happens practically, I will tell you. In the website of MCA, you file a form, right? And you file a copy of the prospectus to the ROC. When I say ROC, that means I am talking about through the MCA, Ministry of Corporate Affairs, right? Or you can say central government. Okay. So it says when it has been filed or delivered to the registrar, it would be valid for how many days? It will be valid for how many days? So I have started to get the answers, and yes, everyone is correct here, 90 days. So when it has been delivered to the ROC, so no prospectus shall be valid if it is issued more than 90 days, right? So if 90 days has passed, then it will be invalid. Correct? Easy enough. And you have to remember, even if you don't know the answer, you have to remember this. Okay, 90 days. Okay, let's discuss about the details of this particular provision. So what do we consider as the date of prospectus? The date indicated in the prospectus will be called its date of its publication. Okay. Now we have discussed this thing कि before issuing prospectus to the general public, we have to, when I say we, I mean to say कि we are the company secretary in a company, right? Or we are the company itself. So we have to do what? We have to file a copy of this prospectus to the ROC, Register of Companies, through MCA, Ministry of Corporate Affairs. And this prospectus, that is no prospectus shall be valid if it is issued more than 90 days after the date on which the copy is delivered to the registrar. So the date on which registrar has received the copy of the prospectus, after that within 90 days you have to issue the prospectus. If you are issuing it after 90 days, it will be considered as invalid, right? So it is what written here. No prospectus shall be valid if it is issued more than 90 days. Okay. Now what this statement says, every prospectus issued shall on the face of it means on the front on the front of it, it should state the copy has been delivered to the registrar and specify any documents required by this section to be attached to the copy. So delivered or refer to the statement. Basically it is saying ki, first of all you have to state that the copy has been delivered to the registrar, and second thing, if any other documents are required by the ROC that you have attached with the prospectus, that also you have to state, right? All the documents. Clear? Okay, now clear. See, if you don't know the answer, don't worry about that. You are here to learn, you are here to remember the facts. I'm telling you, this is the most scoring subject you can have, right? In which you don't have to go to the concept, you just have to remember the clauses, right? Or provisions. Okay. The grievances related to dematerialization of the securities by unlisted public company shall be submitted. Now it says if there is any grievance, any complaint with relation to the dematerialization of securities. What is this dematerialization? So in earlier days, what do we have? We used to have the share certificates in the physical form, right? So when we convert that into demat form, depositories, we have several depositories, NSDL, CSDL, CDSL, right? So when we convert that into demat form, and if any grievance is there, and that's related to the unlisted public company, so this grievance would be submitted to whom? ROC, Tribunal, SEBI, Investor Education and Protection Fund. So let me check the chat section first of all. No. I can see no one of you is correct. Yeah. None of you is correct. Okay, except Krishna. Okay, last answer I got. Okay. Don't worry about that. Yeah, IEPF authority. So the grievances related to the dematerialization of securities will be submitted to the IEPF. Let's discuss about the details of this. Then we will look at the this in this you don't have to don't have any underlying concept. You just have to remember this thing. Grievances which are related to the dematerialization of the securities will be submitted to the this IEPF, right? Okay. Now sixth question. Every unlisted public company shall submit form PAS 6. Okay, first of all, let me tell you why the name of the form is given as PAS. What is the logic behind that? So PS, basically you have the chapter in Companies Act 2013, Prospectus and Allotment of Securities. So from that chapter, Prospectus and Allotment of Securities. So you can see P for Prospectus, Allotment of Securities. So from this, the name has been given as PAS. So we have different form numbers, right? So every unlisted public company shall submit the form PAS 6 to the registrar within how many days duly certified by company secretary in practice or chartered accountant. See, first of all, you need to know what is this PAS 6 form. So basically it's the audit for share capital, right? We will talk about it. Don't worry if you don't know about this. We will talk about this in detail. Okay? So let me check first of all the chat section who all of you are correct. Then we will talk about the details. Okay. So okay. So not everyone is correct, but yeah, some of you are correct. That is 60 days from the conclusion of each half year. Okay. Now let's talk about this in detail. Why this PAS 6 form is filed. What is that form? Then you will remember the number, na? Then you will remember this. You have to file this every half year, and within 60 days after the conclusion of half year, within 60 days, within 2 months, you have to file this. But let's first understand what is this form actually. Okay. Now, this form is the reconciliation of the share capital audit report. So basically, what the company is trying to do, company is trying to match their share capital with the securities they have in the demat form or in the physical form. So they are matching it, they are reconciling it. So they are saying, they are looking if everything is fine or not. Whatever shares they have issued, that is getting equal to all the demat securities they hold. This is why this reconciliation of share capital audit report is done. Now got the understanding what is this PAS 6 and what is this reconciliation of share capital audit report? Now you got this. Okay. Now it says further that every unlisted company shall be doing this in form PAS 6 to the registrar. They shall be filing this to the registrar within 60 days from the conclusion of each half year. This was the question, right? And it should be certified by the CS or the CA. Now, if the company finds any difference between the share capital issued and the demat shares or the physical form shares, they are going to instantly inform the depositories, right? That is very logical. They have to inform this is not matching, right? Now, if any security holder has any grievance with relation to this rule, then they should be filing their concern to the IEPF, that is Investor Education and the Protection Fund. Now clear the details about, we have discussed about the PAS 6 in detail. I have even given you the logic behind the name of this form, PAS, right? Okay. Let's move to the seventh question that says, which prospectus is the incomplete prospectus? Now we have deemed prospectus, abridged prospectus, shelf prospectus, red herring prospectus. So let me give you a brief about all the prospectus, then we will discuss the answer. Deemed prospectus, we have just now covered this deemed prospectus, isn't it? It says if you are issuing the shares through the issuing house, so whatever document your issuing house or underwriter or broking firm through which they are raising funds, that document will be deemed to be a prospectus. What is this abridged prospectus? So basically this abridged prospectus is attached with the application form. Okay, just remember this, it is attached with the application form, abridged prospectus. It basically gives the summary of all the important features of the prospectus. Okay, understand this very carefully. I'm giving you each and every option in detail so that you remember right now while we are discussing it. So abridged prospectus, you have got the understanding. Now what is shelf prospectus? Shelf prospectus, just understand it with this point of view. You have a book that is placed on this shelf. So whenever you need to revise any concept, you can take out this book from the shelf and you can revise it. Similarly, shelf prospectus of a company is that prospectus which they can use multiple time to issue the shares within 1 year. Clear? Logic is clear? Now, what is this red herring prospectus? And first of all, let me check the chat section who all of you are correct here in this question. Then I'll discuss with you what is this red herring prospectus. And okay, I have got the answers. Yeah, red herring prospectus is the correct answer. Very, very good, everyone. Not everyone, but even if you haven't given me the right answer, koi baat nahi. That is, you are here to remember this fact. Okay, so red herring prospectus is the answer. Now let's discuss about the red herring prospectus in detail. So we have covered these three prospectus. Now let's discuss about the red herring prospectus. Now, this is the prospectus as per the Act, Companies Act, which does not give you complete particulars, and for which aspect it doesn't give you details. It doesn't give you details about the quantum of securities, that is the number of securities that you are going to issue to the public. This is what your this red herring prospectus is. It doesn't give public the quantum of securities we are going to offer. Okay, so you might ask me, sir, then why we are actually issuing this prospectus, and even the price is not given to the public. Now, so how do really people are going to subscribe for these shares if we are not giving them number of shares to be offered, if we are not giving them the price of the securities? Basically, this is called book building process. Book building process. What happens in this? You are giving the abridged prospectus to the people, to the public, right? Now, according to the demand, so they will bid for it. They will say, okay, we are the company, right? We are the company, you and me are the company. We have issued this red herring prospectus. Now, public will say, one guy will say, I will purchase 1,000 share of this company at rupees 1,000 per share. He might say that. Another person will say, he is going to buy 500 shares. He will bid for it, 500 shares for 100 rupees per share. Now, this is called book building process. So this is the technical process. We are not going to go into the softer part of it. But through this process, they basically decide what is going to be the quantum of securities that we are actually going to offer to the public, and what is going to be the price after this book building process. Got the understanding? Okay, now all the underlying concept we are going to discuss now, it is issued prior to the issue of main prospectus. Now this is very important. Now in the main prospectus, obviously you will have more details. Now this shall be filed with the ROC and SEBI at least 3 days prior to the opening of subscription list. Now, this question can also be asked directly. Ki prior to how many days this red herring prospectus must be filed. So it must be filed at least 3 days. Okay. Now you have got the understanding of red herring prospectus in detail, and in fact you have got the understanding of deemed prospectus, abridged prospectus, and the shelf prospectus as well. Okay, with a single question. Let's talk about the 8th question of the day. It says shelf prospectus shall be valid for a maximum of. So I have already given this answer in the previous question, right, when we were discussing the option. Now let me check the chat section who all of you are correct here in this question. Shelf prospectus shall be valid for a maximum of. Okay, so I have started to get the answers, but I haven't. Yeah, I have got the correct answer. बढ़िया बढ़िया. Okay, चलो. That is 1 year. ये कौन लिख रहा है इसमें? अरे वंशिका कैसे हो? ये सब नहीं, यहाँ फोकस करो क्लास में फोकस करना है. ठीक है एवरीवन. ओके 1 year. So that will be 1 year and very very good. Okay, चलो 1 year. So I have already talked about the shelf prospectus in detail in the previous question itself, right? So the answer is 1 year. So shelf prospectus can be used for 1 year. Okay. Now this is what your shelf prospectus is in detail. Let's understand that file shelf prospectus at the time of first offer of security. So you are going to file the shelf prospectus at the time when you are offering your first lot of securities. Then you can use this shelf prospectus every time you are going to offer further securities for the time period of 1 year. But one thing is very important here. Please understand, this question can be asked from this as well. We have discussed one question only, na? But from the shelf prospectus another question can be asked. This question could be about the information memorandum. Now it says whenever you are basically coming up with the subsequent offer, first offer you have filed the shelf prospectus, but at the time of subsequent offer you must file the information memorandum, right? You have to file information memorandum each and every time while coming up with the subsequent offer with the same shelf prospectus. And what is this memorandum is, what it is going to contain? Basically it is nothing but whatever changes has been done till now from the filing of shelf prospectus at the time of first offer of securities. From then till now, whatever changes has been done in the company, like the new charges has been created, if the financial position has been changed, so that change you will include in the information memorandum. And that is very logical, na? Because see, when you are using same prospectus to raise fund from the public and something has been changed, the financial position has been changed, how will the public is going to know about these changes? Obviously through the additional document that we call information memorandum. Clear? Everyone clear? चलो clear तो like करो फटाक से फटाफट, तब मैं आगे बढ़ूंगा. चलो फटाक से everyone clear ना? Why we file the information memorandum? If it is clear to you, like it. Okay, चलो. Now let's move to the 9th question of the day, that says the amount payable on application on every security shall not be less than -% of the nominal amount of the security as per Companies Act 2013. So we are right now talking about the 2013 Act. See, Companies Act 2013, not about the SEBI regulation. See, we have when we issue the shares, first what we do, we are a company and we are issuing our shares. So first we ask for the application money. So the question is saying what should be the minimum percentage for this application money that we are asking from the potential investors. So minimum percentage of the nominal amount, what it should be as per Companies Act, not as per the SEBI regulation. So I'll tell you about the SEBI regulation as well, don't worry. Question could be asked anything. So as per Companies Act, what is written? Can anyone tell me? Yeah, so I have got few answers correct, but not everyone is correct. Yeah, so the answer is 5%. Acha. So can anyone tell me this thing ki what is the percentage as per the SEBI regulation? Can anyone tell me what is the minimum percentage of the nominal amount as per the SEBI regulation? So we have talked about the Companies Act, na? So what is the percentage? Yeah, very good, very good. So as per the SEBI regulation, the minimum amount is 25%, right? So I'll give you the example. Suppose 100 is the nominal value, and if you are asking your potential investors or public to apply for the shares, the minimum amount you should be asking from them should be 5 rupees as per the Companies Act. But in the Companies Act, it is written ki 5% or as may be prescribed by the SEBI, and SEBI has prescribed 25%. So you should be asking at least 25 rupees, right, from the general public. Okay. So this was the explanation. We have talked about this, but let's read the minute points as well. If the company has made a public offer of security, it shall not make the allotment. It is not going to make allotment unless the minimum subscription has been made. And acha, can you tell me what is the limit of this minimum subscription? You tell me. Now there is one more question that can be asked from this. Okay, so company is not going to make any allotment unless the minimum subscription has been received by the company. Suppose the total number of shares we are offering is 1000. So out of this 1000, what will be the number of shares, minimum number of shares for which we are going to get the subscription? Can anyone tell me? Can anyone tell me the answer of this question? See, we have just now talked about in the question only about application money. Now I am not talking about the percentage of application money. I am saying if we are, as a company, are going to offer 1000 shares, minimum of how many shares we are going to basically receive application for off. What is the minimum number of application we should get so that we can continue our allotment? Can anyone tell me? Yeah, that's really good, and I am really proud of you all. That is 90%. So you should be remembering all these facts, okay? And if you don't remember this, remember it right now. So SEBI has prescribed the minimum sum payable on application as 25. We have discussed about that. And the minimum subscription in case of equity is 90%. So it should not be less than 90%. So minimum 90% subscription should be made. And in the case of application money, minimum 25% application money you should be calling, right? And as per the Companies Act, 5%. But what the company is going to actually follow? Obviously 25%, right? Because SEBI can understand this thing. Whenever we have the extra regulations, they can increase the compliance. They can't reduce. They can't reduce the compliance. They can increase. They can restrict. They can put more restriction. They can't provide the leverage to the companies. So SEBI, RBI, for that matter, any regulatory body can make the law more strict. They can't leverage it. They can make it more strict only, right? So they are making it stricter, more strict. Earlier it was only 5% as per the Companies Act, but now it is 25%, right? Okay. Whenever a company makes any allotment of security, it shall file with the registrar a return of allotment within 30 days in form what? Now again, you have made the allotment, right? You have got the enough subscription amount, a minimum subscription you have received, and minimum application money also you have called. So now you are making the allotment to the public. So for this allotment, you should be filing a form with the ROC again through the MCA. So within how many days? Within 30 days is given to you, but it is asking you in which form? PAS1, PAS2, PAS3 and PAS4. Let me check the chat section, and yes, everyone is correct. That's really good. So you have to remember the clause, no choice. PAS3. Okay, so whenever the company is going to make this return of allotment, they have to file the form in PAS3, right? Now, certain other facts we are also going to discuss, because it is not necessary that examiner is going to ask you only about this 30 days and PAS3. So one more additional information is here, that in case of any default under this section, penalty on the company and its officer will be what? 1000 rupee for each day during which the default is going to continue, or 1 lakh rupees, whichever is less. That additional fact you have to remember, right? Now, before moving to the 11th question, we have a lot of questions, don't worry. I want to talk about this ultimate test series that we are bringing for you. In fact, we have brought it for you. So you need to practice more and more. And as I have told you in the initial, in the first slide itself, key for the Companies Act, you can do, you can use the reverse engineering, but other than that, all the subjects you should be first get hold of the concepts, then attempt the MCQs, right? So this ultimate series is going to give you the lot of MCQs from the phase 1 and as well as for the phase 2, right? So pattern will be as per the new notification, and you are going to have 12,000 plus MCQs and plus descriptive test as well in the form of chapter wise test. So you will get chapter wise MCQs first of all, then you will also attempt the PYQs in respect of a particular chapter. So let's suppose prospectus and allotment of security is a chapter, right? So with respect to this chapter, whatever questions has been asked previously, that you will find in a single file. So solved PYQs will be there chapter wise and as well as overall as well. Current affair test, full length test, phase 1, you will have mocks for phase 1 and as well as mock for phase 2. So you are going to, and you must be doing so much of practice because it is necessary to crack this examination. Not even this, but any of the government competitive exam requires you to go through the test series. No matter what, you have to take the mocks, right? So if you want to subscribe to that, how you're going to do that, let me tell you. First of all, go to the EduTap, just type EduTap in the Google browser, right? Browser is your Edge and Chrome, but in the search engine you can type EduTap and you will be redirected to this website. Select courses, and inside the course you have SEBI Grade A course, journalist stream. Click on it and you will be directed to the SEBI Grade A page. Now inside the SEBI Grade A page, scroll down and you will find here the test series of phase 2 and test series of phase 1 plus phase 2. So you can buy anything, whatever you want, whatever is as per your requirement, you can buy anything, right? But please remember, before buying it, just apply this coupon code of save70 necessarily, because you are going to save a lot of money by applying this coupon code, right? So flat 70% off will be there in this 9,000 rupees, right? So it will be around 2,700 for phase 1 and phase 2 combined test series, right? And you will get all the things that we have discussed. Okay, and you can also download the brochure to know more about this test series, what you are going to get, right? Inside it you can just look at that if you want, right? Okay, so this was about the test series. If you want, you can subscribe to that. Okay, let's get back to the questions now. Now we have the 11th question of the day. It says maximum underwriting commission that can be paid by the company. Now it is asking you about the maximum underwriting commission that can be paid by the company for the issuance of debenture is of the issue price of debenture. So what is the percentage? What is the percentage of the issue price of the debenture till which you can pay to the underwriter as the underwriting commission? So it is different for the debentures, it is different for the shares. So you have to tell me about the debenture. So is it 1% or is it 2%? Is it 2.5%, 3.5% or 5%? Have you got the understanding of the question? Now see, underwriters are those people who are helping us to raise funds. So we have to pay some commission to them. Nah? They are like agent. So maximum how much percent we can pay to the debenture holder? So let me check the chat section, and I can see not everyone is correct, but few of you are correct. Okay, most of you are correct, not the few of you, but most of you are correct. And yes, option number C is the correct answer, 2.5%. Acha, can anyone tell me now ki what is the maximum percentage of the commission you can pay to the equity shareholders, right, in case of issue? What is the maximum number? What is the maximum percentage of that? Okay, you type in the chat section. Till then, we will look at some additional information with respect to this particular provision, right? So a company may pay commission to any person in connection with the subscription of its securities. But the point here is you need to remember all the percentage. So in case of shares, in case you are issuing shares, so 5% of the issue price you can pay as the commission to the underwriter, or a rate authorized by the article. What is this article? Article is article of association. So there are two prime documents, basic documents of any company while they incorporate their company. They have these two documents, MOA and AOA. MOA is Memorandum of Association. AOA is Article of Association. So memorandum contains the objective of the company, what they are going to do actually. Article of Association is basically tells you about the internal policies, internal rules and regulations, right? Okay. So the question, so the thing is कि 5% or the rate authorized by the article, whichever is less in case of shares. So this question I have asked you, and let me check the chat section. Yes, very, very good. Everyone is correct, and I am really proud of you all. So even if you don't know this, you have to remember in this particular class. Okay? So we have a lot of classes for companies that, and that's the good news for you. So you can just go through all these PPTs, all this PDF, whatever you can call this, and you can have the whole of it. Okay. In case of debentures, we have what's the maximum limit? The limit is 2.5% of the issue price. This was the question, right? Now, next question, question number 12 says, if the minimum amount has not been subscribed and the application money is not received within a period of dash days from the date of issue of the prospectus, the received amount shall be returned within 15 days. So it is continuing basically the previous question that we have discussed about the minimum application money, remember? So that question in continuous we have this question. It says if the minimum amount has not been subscribed, 90% has not been subscribed and the application money is not received, right? Within a period of how many days from the date of issue of the prospectus, then you have to return the money. So within how many days you are required to collect the amount. Okay, so within that days, if you haven't received the money, minimum subscription, you have to refund the money within 15 days. So let me check the first of all the chart section, who all of you are correct, and some of you are deleting their comments. Don't delete it, even if it is wrong, don't worry about that, right? So yeah, most of you are correct. That is 30 days and yeah, okay. See what it is asking. So if in this 30 days, minimum subscription, you haven't received the minimum subscription after the closure of issue, within 15 days, you have to refund the money, right? Okay. So nothing to explain here. I have already explained. This was the basic question. So nothing explanation here. Okay. So within 30 days, if you are not receiving the minimum subscription amount, you have to refund the money within 15 days. You have to remember both of these numbers, 15 and 30, right? Now let's talk about something special that we call differential voting rights. Oh, so what is this differential voting rights? You know what is this? See what happens. We have different classes of shares in a company. So some might get more voting rights, some might get less voting rights. And in the startup culture, we have in the India, we have startup culture. So we have DVRs, differential voting rights. So the promoters or the founders get the more voting rights as compared to the ordinary shares. So in that respect, it is asking you, not in the respect of startup company, but in the ordinary course of business, it is asking you, ki voting power in respect of shares with differential voting rights of the company shall not exceed -% of the total voting power, including voting power in respect of equity shares. So forget about this. Just tell me ki voting power in respect of DVR, that is differential voting rights you have, right? So we have certain shares. So voting power for these shareholders should not exceed how much percent of the total voting rights? This voting right should not exceed which percent? Okay, let me check the chat section, and yes, okay, everyone is correct in this question, and I am really glad to see this, ki no one is incorrect here. That's really good. Answer is yes, 74%. Very good. Now, so we have certain conditions. We have just talked about a single condition. Let's talk about all the conditions now, because question could be asked from any condition. First condition is that ki it should be authorized in article of association. We have talked about the article of association. Okay. Okay, I'm not getting, yeah, okay, I have got the answers. Okay, good. So ordinary resolution at general meeting of the shareholders. Now understand this very carefully. For issuing this DVRs, you don't need to pass a special resolution. You only require to pass ordinary resolution. So two conditions are satisfied. Now third condition says whatever we have discussed in the question, voting power in respect of shares who holds basically this DVR should not exceed 74% of the total voting power. Okay, it should not exceed 74%, right? Now one more condition is there that says no default in filing should be there in financial statement, in filing the financial statements or annual returns. We have some annual returns in every company. We should be filing annual returns to the ROC, register of companies, through the MC website, right? So they should not be in default for filing these financial statements or annual return for 3 financial year. This data is also important. Immediately preceding the financial year in which they have decided to issue these DVR. So if I am deciding, if we are deciding right now if we have to issue this DVR, so for preceding 3 years we should not be in default in filing our returns to the ROC. Correct? Okay. Now this there was one more condition, but this has been now eliminated. Okay, this has been omitted. So you don't have to remember this. Okay. Question number 14, it says to issue DVR, again the question of DVR, to issue shares with differential voting rights, a company should not be penalized under the RBI Act, FEMA Act, Foreign Exchange Management Act, etc. during the last dash years. A very easy question. So if you are only allowed to issue DVR when you are not penalized by all these acts. For how many years? For previous how many years? 3, 4, 5 or 6. Let me first of all check the chat section, and yes, everyone is again correct, and I am really happy to say this, that is 3 years you should not be penalized by any act, that is RBI and FEMA. And even if you don't know this, you have to remember all the facts. Okay. Now these are the conditions. We have already discussed about these, and apart from all the previous conditions, we have one more condition, that is they should not be penalized under the RBI Act, SEBI Act and the SCRA FEMA Act, right? Okay. Now, in disputed cases, for how many years be the records related to share certificates to be maintained? Very, very easy question, right? So suppose we have some disputed cases with respect to the share certificate or shareholding, right? So for how many years we need to keep it with ourselves? When we say ourselves, I mean to say we are a company. So for how many years we are going to keep those shares with us? For 5, in the case of disputed, in disputed cases, then 5 years, 8 years, 10 years, none of the above. You tell me the answer. What should be the correct answer here? And no, I haven't got any correct answer yet. Yeah, now I am getting the answer, that is none of the above. Yeah, one person has given me the correct answer, none of the above. Now we are talking about the disputed cases right now. So the question is talking about the disputed cases. So in that case, we have to keep it with ourselves permanently. So what is the explanation part? Let's look at that. Books and documents related to the issue of shares. Books and documents, all the documents. So in disputed cases, for how many years? The records related to the share certificates, all the records. So that we have to keep with us for 30 years. But in case that is a disputed case, you have to keep it permanently. Now, if some share certificate has been surrendered because they are mutilated or torn, so these shareholders can surrender their shares so that they can get the new copy of it. So if that is the case, then immediately after getting those shares, you will be stamping it with cancelled shares, and that you are going to destroy after expiry of 3 years from the date of surrender. And that is the case. That's why some of you have given me the wrong answer. So you have to remember 30 years permanently plus these 3 years as well. Right? Clear? Okay. Let's talk about the question number 16. Preference shareholders shall have the right to vote on all resolutions. So basically, in general case, preference shareholders don't have the right to vote on all resolution. They can only vote on the resolution that is impacting their right, because they are getting the fixed dividend, right? So they are not allowed to vote each and every resolution. But if their dividend, fixed dividend, they are getting the fixed dividend, not the interest. If their dividend is not paid for how many years or more? Now for certain years, if their dividend is not paid, then they have the right to vote on all the resolution that is passed by the company. You know the basic difference between preference shareholders and the equity shareholders. I hope that, right? Preference shareholders are all shareholders which are who are going to get the fixed dividends, but on the other hand, when we talk about the equity shareholders, they get the portion of the profits, right? It is not fixed. So for how many years? 2 years, 3 years, 4 years, or 5 years, if they haven't received any dividend, they have the right to vote. So let me first of all check the chat section, and yes, again, most of you are correct, and yes, not most of you, in fact everyone is correct in this question, and I am really again glad to see this. That is 2 years. So for consistently, if for 2 years they are not getting any dividends, they have the right to vote. Now let's talk about the details of the question, each and every important point. So preference shareholders have the right on which resolution? Only on those resolution which is going to impact their rights, only on those resolution. Or if there is any other resolution for winding up of the company, then they can vote on that. Or for the repayment or reduction of their capital. Obviously, if their capital is being reduced, they have to right to vote on that resolution. But the thing is, if for period of 2 years dividend has not been paid to them, then they have the right to vote on each and every resolution, that is on all resolution. Everyone is clear about that. You have to remember all these provisions. Okay. Question number 17. Let's talk about it. A special resolution authorizing the issue of sweat equity shares shall be valid for making the allotment within a period of not more than dash from the date of passing of this special resolution. So what is this sweat equity shares? Let's understand this first of all. So when you get any technical know-how, from the directors, officers of the companies, then you basically authorize the issue of sweat equity shares to them. So it says when the special resolution has been passed, so within how many months or years you should be basically making the allotment to those directors and officers. Otherwise, you have to pass this special resolution again. So after passing the special resolution, till for how much period this special resolution is valid actually to allot the shares, to allot the equity, to allot this sweat equity shares. So let me first of all check the chart section. Options are 6 months, 12 months, 2 years, 2.5 years. So yes, I am getting the right answers again from most of you, that is 12 months. Very, very good. Okay, now see, let's talk about this sweat equity shares in detail and few more conditions that are very, very, very important from the examination point of view, because we have only discussed one part of it, but they can ask you multiple questions from this particular provisions, right? So we are going to discuss about the additional point as well. So that is a special resolution authorizing the issue of sweat equity shares shall be valid for making if we have allotted it within 12 months, that you know, right? So within a period of not more than 12 months from the date of passing of the special resolution. Special resolution has been passed within 12 months, you have to allot the this sweat equity shares. Now there are 2 more conditions that can be asked in the numerical form, though we are not expecting any numerical form of question in the Companies Act, but they can be asked in theoretical as well, in theoretical question as well. So it says the company shall not issue sweat equity shares for more than higher of 15% of paid up equity capital. So they can't go beyond 15% of paid up equity capital, or 5 crore. So whichever is higher, please remember this, whichever is higher, they can't go beyond that. In a financial year, one more important thing is, in a financial year, in a particular financial year, they can't go beyond 15% of the paid up equity capital or 5 crore, whichever is higher amount. But overall, at any time when you calculate, so in this way you can say, na sir, on the first year we would be issuing 15% of the paid up equity share capital to the officers. Again, in the next financial year, we will again issue 15% shares, 15% of the paid up equity capital. Again, on the next year, we are going to issue 15% of the paid up capital. No, you can't do that, because there is one more clause. It says there is one more restriction. It says at any time. Are you able to see it or not? Okay, my face is here. Okay, so I'll just write it down here. This picture is saying 25% of paid up capital. It says 25% of paid up capital at any time. At any time. So overall, you should not exceed 25% of the paid up capital at any time. Have you got all the provision related to the certificate shares? You remember these points, right? Anything could be asked in the examination, right? Okay. Now, question number 18th, it says, so we are not only discussing the questions and the options, we are discussing the related provisions as well, so that you can remember it. So that's why these classes are so are in so much depth, and all the provisions you will get, all these PPTs you will get in the Telegram channel. Don't worry about that. So you can remember it from there, right? So question number 18th, the new debenture certificates in case of transfer shall be delivered. So in case the holder has transferred the certificate to a new person. So in case of transfer of these securities, so the new debentures shall be delivered within dash days, months of receipt of transfer deed. So suppose I am the debenture holder, right? And I am selling this debenture to someone else. So I have transferred it. And this transfer deed, I have informed the company about it, ki I have sold my debenture. So within how many days of this, the company is going to deliver the receipt of transfer deed. Okay? So the new debenture certificate in case of transfer shall be delivered. Okay, so it is asking about the new debenture certificate in case of transfer shall be delivered. So that's what I have explained to you. So within how many days it should be received? 15 days, 1 month, 6 months, or 3 months. Let me check the chat section. And okay, not everyone is correct here, but few of you are correct. That is 1 month. Here in this question, not everyone was correct, but don't worry about that. You have to remember all the facts. Okay, let's discuss about in detail what is this transmission and what is this basically transfer. First of all, let me tell you what is the difference between transfer and transmission. So we have talked about the transfer case only, right? Ki certificate will be delivered within 1 month in case of debenture. But let's talk about that transmission. Transfer is, you know, now what is transfer? We have sold the share, or we have sold the debenture. That is your transfer. But what is transmission? Transmission is automatic. Suppose the owner of the shareholder or this debenture holder dies. So whoever is the legal heir of that, it will be transmitted to him or her automatically. So this is what transmission is. Understood? So this is the basic difference. Now let's talk about all the related provision that covers this transfer and the transmission, so that if any question is getting asked, if any question will be asked from you from this provision, you will be able to answer it. So it says, first of all, in case of subscriber to the memorandum means who are the promoters of the company, basically MOA, AOA. Okay, they have the their name has been written on this MOA, right? So subscribers to the memorandum, they are the promoters, founders. So in that case, subscribers are going to get the certificates within a period of 2 months from the date of incorporation. I have told you na, ki when you do incorporation, you file MOA or AOA. If you know about these companies, expect in the MCA, Ministry of Corporate Affairs, if you want to incorporate a private company, you can do that very easily. It's a very easy process, but you will need a sign of a CA, chartered accountant, right? Digital signature. So you can go to the MCA and you can incorporate a company. That's a very easy process, right? So it says, if you are incorporating a company and your name is written as the subscriber, as the founder, right, or promoter, whatever you want to say it. Basically, in technical term, we call it subscriber. So your name is here. So in that case, within a period of 2 months from the date of incorporation, that certificate should be delivered to you. Now, in case of any allotment of any of its shares. Now other allotments, what you are doing, other allotments, then within a period of 2 months again. Okay, we are right now talking about the shares. Please remember, we are talking about the shares right now. Okay, now in the case of a transfer, means you are selling it, or transmission of securities. Security means now we are talking about the debentures as well as the shares within a period of 1 month from the date of receipt by the company. So when the company has received the instrument or deed of transfer or transmission, within 1 month they have to deliver the certificates. Every company shall be going to deliver the certificate to the new security holder. In case of any allotment of debentures, now this is the debentures allotment within a period of 6 months. Again, you have to remember this. In case of other allotments, in case of debentures, so the time period is 6 months. Otherwise, in case of transfer and transmission, for both it is 1 month. In case of shares, normal case scenario, 2 months, and subscriber to the memorandum, again 2 months. Got it? Got the overall understanding? Yeah. Now see, the question that we had is about the transfer. Who has asked me this question? Nachiketa. Question is asking you about the transfer, na? So in the case of transfer, see, this was the case. Securities, not this allotment. Allotment months are 6, but transmission and transfer months are this 1 month. Got the clarity? Why this is not 6 months? Why 1 month? Nachiketa? Right. Okay. Let's move ahead. In question number 19, in case the company has incurred loss during the current financial year up to the end of the quarter immediately preceding the date of declaration. This is about the interim dividend. So first of all, we will understand what is this interim dividend, what is that final dividend, right? So interim dividend is any dividend which can be declared by the company within a year. So anytime during the year, they can basically declare the interim dividend, and final dividend is paid after the financial year, right? Clear? Okay, Nikhil is saying share allotment 2 months. Very good. Okay, now you have to remember these provisions that I have told you, right? Okay, now the question was, yeah, so in case of interim dividend, in case company has incurred loss during the current financial year up to the end of the quarter, it is basically saying, okay, we will explain this in the next slide. First, just read out the full question. Up to the end of the quarter immediately preceding the date of declaration of interim dividend, such interim dividend shall not be declared at a rate higher than average dividend declared by the company during the immediately preceding. Oh, very easy question, very easy question. So it is basically saying, if you don't have enough profits, in the current year till the quarter after which you are declaring your interim dividend, so your dividend rate should not go higher of the average dividend rate for preceding how many years? So 2, 3, 4 or 5. So let me check first of all the chart section and let me see who all of you are correct. And yes, again most of you are correct. Okay, that's very, very good. That would be 3 years. Okay, that's very good. Not most of you, in fact everyone is correct in this question. Okay, that's really good. Chalo, let's have the overall understanding of this question, what it is talking about actually. So it is saying, suppose you have this financial year of 1st April 2018 and interim dividend is what? It can be declared within the financial year anytime, right? So you have 31st March 2009. So out of profits for this year, interim dividend can be basically declared, right? Now this can be declared. Now let's talk about next financial year. Okay. In the next financial year, what is happening here? You are declaring the interim dividend on 31st of July, let's suppose. Okay. So April, May, June, July. Okay. So April, May, June, and this till this quarter, you haven't basically got any profit. So out of the profit generated in the financial year till the quarter preceding the date of declaration, so before this quarter, okay, that is till 30th of June June. If you don't have any profit, and this is the date of AGM, then it is the saying, if the company has incurred loss during this period up to the end of the quarter preceding this declaration, then it should not be giving more than average of dividend rate preceding 3 financial year. That is very easy, huh? You have to remember this fact. Preceding 3 financial year, you have to add it and you have to divide it by 3. So more than that, you can't pay your dividend. Okay. Question number 20th. In the event of inadequacy or absence of profit in any year. Now same question is here, right? I think it is the case of dividend. Let's read out the full question, then we will get to know. In the event of absence of profit in any year, company may declare the dividend. Yes, it is the question of dividend. It's the important part from the examination point of view. May declare dividend out of free reserve subject to the fulfillment of following condition. So if you don't have the adequacy of profits in the year, okay, then also you can declare the dividend. Now you are not talking about the interim dividend. Please remember this thing. Whenever in the act or whenever in the clause, when we say only dividend, okay, we are not only talking about interim dividend, we are talking about all the dividends, interim dividend and the final dividend, each and every dividend, right? Okay, so don't consider this just the interim dividend. So it says following condition must be fulfilled. The total amount to be drawn from such accumulated profit shall not exceed. So you have to give me the conditions. It should not exceed -% or in the ratio also you can tell me -% of the sum of its paid up share capital and the free reserve as appearing in the latest audited financial statements. Now first we will discuss about, okay, I have got the answers in percentage. That's really good, Bhakti, and Nachikeet, and everyone is correct. Okay, that's really good. So okay, we will talk about the answer in the later part. Okay, I'll give you the answer. Answer is 1/10, that is 10%. Now let's move to the explanation part. Even if you don't know this answer, don't worry about that. We are going to deal with this in detail. Okay, in the next slide. Chalo. Now the explanation. It says, in the event of absence of profits in any year, there is a year you have not sufficient profit, but you want to declare dividend. Why do company basically declare dividend? To basically have the good reputation in the market, right? That's why they declare the dividend. Now you don't have enough or sufficient dividends, but you still want to declare the dividend. You can do so from the free reserves you have. You have accumulated profits from the previous years, right? So you can do you can declare the dividend from these accumulated profits or reserves, but there are few conditions that must be fulfilled. We are going to talk about each and every condition, and there are 3 to 4 conditions. Okay? In the question we are only talking about one condition, but we are going to talk about in the explanation all the conditions, so that if any condition is asked, you will be able to answer that question. So first condition says the rate of dividend shall not exceed the average rate of the dividend for immediately 3 preceding financial years, that we have already discussed in the previous questions, right? So this you know. For example, suppose dividend for last 3 years is 10%, 15% and 11%. Now in the current year company wants to pay the dividend, but they don't have sufficient profits, so they want to pay the dividends from the free reserve. So the maximum rate of dividend they can pay is 10 plus 15 plus 11 divided by 3, that will be 12%. Very easy, nothing very difficult, nothing very rocket science here, very easy. Plus divided by 3. Now next condition you must remember is that the total amount to be drawn. Now this is very important, huh? Listen to me very carefully. See, you are drawing some money from your accumulated profits or from your reserve, general reserve, right? Isn't it? Now the amount you are drawing from it shall not exceed 1/10, or you can say 10% of the sum of its paid up share capital and free reserve. This was the question. Whatever you can see as the free reserve and the paid up share capital in your financial statement, in the latest financial statement, so you can't exceed more than 10% to withdraw money. Now you can't say, okay, sir, we are withdrawing 10%, all of that we can pay as dividend. No, just look at the new conditions, then you will get to know that right now it is talking about only the drawing of accumulated profits. This is not saying ki, okay, draw the 10% and just release this amount for the dividend. No. Next point says the amount so drawn. See what is written here? The amount so drawn shall first be utilized to set off the losses incurred in the financial year. So you have drawn maximum of 10%, but after that, whatever amount you got, first you have to set off your current year losses. Then whatever is left, whatever amount drawn is left, then you can declare the dividend out of it, right? Okay. The balance of reserves after such withdrawal. Now, if this withdrawal, this withdrawal that we have talked about, the 10% case, suppose you have withdrawn, see in the second condition it is written कि you can withdraw 10%, ठीक है? So when you withdraw 10%, there is one more condition. It says कि when you have withdrawn some money from the accumulated profits or the reserve, then after that, whatever balances of reserves you have, it shall not fall below 15% of its paid up share capital. Now, one more condition. When you have withdrawn 10%, suppose after withdrawing 10%, you are basically falling below the 15% of the existing paid up share capital, then you can't withdraw even the 10%. So how much percent you will withdraw? That depends on the case to case basis. We will look at the example to understand this very carefully. Just understand this very carefully. It can be asked in the numerical form as well. Suppose the paid up of the company is 100 crores and the free reserves of the company is 20 crore. The point number 2, that is the second condition we had talked about, is that out of this money, that is out of 120 crore, how much amount we can withdraw if we don't have if we don't have sufficient profit in the current year and we want to pay the dividends, how much amount we can withdraw from it? So we can withdraw 10% of this 120, that is 12 crore. So you don't say to me, sir, okay, we can withdraw 12 crores. No, you have to look at the fourth condition as well. Right now, the fourth condition says after the withdrawal, you should not fall below 15% of the paid up capital. So paid up capital is 100 crore. 15% of 100 crore is 15 crores. So you should not be falling below. Is it visible or not? My photo is there? No. Is it visible? It is visible. Okay. So you should not fall below 15 crores. Okay. So when you withdraw money, then your paid up capital should not fall below 15 crores. So that means कि 20 minus 15 of 100, ठीक है? Balance of reserve, not the paid up share capital. Obviously, you are not going to withdraw your share capital, na? Balances of reserve should not fall below 15 crores, right? So 20 minus 15, how much amount you can withdraw? Only 5 crores. So what is the lower limit here? 12 crores or 5 crore? Lower limit is 5 crore rupees. So you have to look at all the conditions. Now the amount is 5 crore, what you can withdraw from it. Got the understanding? So we have talked about in the question only about 10%, but apart from 10%, all other provisions, though the numerical would not be asked, but just for the understanding point of view, I have included this example for you. But forget about the example. But you should be remembering this point, कि 10% and your reserve after such withdrawal shall not fall below 15% of the paid up share capital. So your paid up share capital was 100 crore, right? So 15% of 100 crore is 15 crore. So your reserve should not fall below 15 crore rupees. And right now your reserve is how much? Your reserve is 20 crore. So out of 20 crore, you can withdraw how much amount? Only 5 crores as per point number 4. Got the understanding now? Okay. So the answer would be 5 crore here. Okay. Let's look at the 21st question. If dividend not paid or warrant not posted by the company within 30 days of declaration. Okay. So it is about the, see, you have declared the dividend. Acha. So when you declare the dividend at the AGM. Okay. When the shareholders, when the members declare it, right? The directors, board of directors only propose the dividend, but it is approved by the members in the AGM, right? But once it is declared, you have to pay it within, or if warrant is there, you have to post it within 30 days of declaration. But if you haven't done that, interest will be charged per annum. what will be the rate of interest? You tell me, everyone. 10, 12, 15, 18. Okay. Okay, so I got few correct answers, few incorrect as well. Don't worry if you don't know this. The rate charge will be 18%. So this is the complete chart about each and everything. So some of you have given me the 12% answer as well, and I know why you have given this, because there is some confusion regarding that. I can understand, because you have 12% interest as well, but the context of 12% is something different. So this is the overall chart for the dividend part. You must remember this chart from the examination point of view. Let's look at this very carefully. Suppose you have declared the dividend. Now, after declaring this dividend, within 5 days of declaration, first of all, within 5 days, you have to remember each and every point. We are in the question talking about only the rate, but it is not necessary. Now, the question is going to be asked from you only about the rate. So you have to remember each and every fact we are discussing right now. So within 5 days of declaration, you should be depositing. If we are the company, we should be depositing in the scheduled bank, in the separate bank account within 5 days, right? And then from this bank account, we are going to pay the dividend to the shareholders. Now, within 30 days of declaration, if we haven't paid the dividend, okay, or we haven't posted the the warrants, then the interest will be charged at the 18% per annum. Understood? Now, if dividend not paid, or it is not claimed, okay, after this 30 days, within 7 days, after this 30 days has been expired, within 7 days, you have to, very, very important, you have to, these days are important, you have to transfer it to the unpaid dividend account. After the end of the 30th day, within 7 days, you must be transferring it to the unpaid dividend account. Understood? Now, if you have defaulted in this, you haven't transferred the amount within 7 days, then the interest will be charged at the 12%. So this is the answer of 12%. If you haven't transferred it to the unpaid dividend account, right? Now, one more thing is important. After transferring it to the unpaid dividend account, within 90 days, after this day, within 90 days, you have to basically prepare the statement and place it on the website. Ki this much dividend has not been claimed. This is the name of the owner of this of these many shares, so that if that shareholders knows about it through the website, right? So he can claim the dividend. Okay, easy. Now you have got the overall understanding of all the chart. So anything could be asked, huh? So that's why we are preparing for the worst case scenario. We are not only discussing the question, we are discussing all the important aspect of the question, right? Okay. Question number 22 says, amount in unpaid dividend account lying there. Easy question. So we have transferred the unpaid dividend account now. We have transferred the amount. So it says, after transferring it, amount in unpaid dividend account lying there for how many years must be transferred to the IEPF, Investor Education and Protection Fund. So for how many years, if that amount is lying there in the unpaid dividend account, we have to transfer that into the IEPF. This is very easy question, and I hope everyone would be correct. And this is the important question as well. So 5 years, 7 years, 8 years, 10 years. Okay, I have not got the answers. Why so? I don't know. I'm still waiting. I'll wait for your answers. Yeah, now I have got the answers. That's really, really good. Okay, PDF will be basically we'll find PDF in the Telegram channel. Don't worry about the PDF, right? So the answer is 7 years. Yes. So for 7 consecutive years, if consecutive, remember this, consecutive years, if you haven't got that, if it has not been claimed by anyone, then it must be transferred, right? Okay. So IEPF, we have talked about that. Okay, let's move to the 23rd question of the day. That says, the first auditor of a non-government company, we are talking about right now, non-government company, needs to appoint the board, needs to be appointed by the board in how many days? We are talking about the first auditor, not the normal case scenario auditor, only the first auditor. So within how many days we have to appoint the board has to appoint the first auditor. Okay, from the date of the registration of the company. 15 days, 30 days, 90 days, 180 days. Very easy question. Don't worry if you don't know this. We will discuss about this. Okay, so I have started to get the answers, and yes, every one of you is correct, and I'm really proud of you all. That is 30 days. Really, really good. So now what happens in this? Ki in case you have the non-government company, right? In case of non-government company, this is dealt in section 139, appointment of auditors. First auditor will be appointed by the board of directors within 30 days. But it is not necessary ki question is going to be asked from the first auditor only. So you have to remember all the related clause as well. So we are right now talking about only the first auditor. So first auditor should be appointed within 30 days. Now, one more important point is here. In case, question could be framed from this statement as well. In case board of director fail to appoint this first auditor within 30 days, the board of directors shall be informing this to the members, to the shareholders. Now, members shall be appointing this first director within 90 days at the EGM, extraordinary general meeting. So generally what happens, AGM is there. So this in the auditor is appointed usually in the AGM, right? And this AGM is usually happened within 6 months after the closing of the financial year, right? But now it is urgent to appoint the first auditor because board of directors has failed to do so. So therefore we are appointing it in the extraordinary general meeting. Understood? Okay, AGM and EGM is for members of the company, the shareholders for the company, right? And he is going to hold the office for the conclusion of the first annual general meeting. And I have told you that first annual general meeting is held within 6 months after the closure of the financial year, generally, right? For the first annual general meeting, though the 9-month period is there, but the normal scenario, see, understand this, these are very technical terms. See, I'll explain you with example, otherwise you will be confused. Suppose you have 19 to 20 financial year, okay? And inside this financial year on 21st of November, okay, you have incorporated your company. Now the first auditor is going to get appointed by the board of directors within 1 month. Within 1 month. Okay, first auditor, and this will hold the office till the first annual general meeting. So the first annual general meeting for this company would be what? Suppose it is not November, suppose it is June, 1st of June. Okay. So basically what happens, the clause says the first annual general meeting generally happens after the end of the financial year, that is after the 1920 year. It will be held within December of 20. Okay, if you go by the provision, it will be held within 31st of December of the 2020 year. But from the next year onwards, listen to me very carefully, from the next year onwards, that is 20 to 21 financial year, after the closure of this financial year, after the closure of 20 to 21, that is 31st March 2021, only 6 month time is given to the company to hold the annual general meeting. This is very important. Okay? So in the normal case scenario, 6 months, within 6 months AGM will be held, but for the first annual general meeting they will be provided more time. Okay, but this is not relevant from the question point of view, but I have told you so for the as far as extra information is concerned. But for this question you should remember that within 30 days board of director is going to appoint the auditor, and if board of director fails to do so within 90 days, in the extraordinary general meeting members are going to appoint that, right? Okay, now you have done beautifully 23 questions with all the explanation. Now tell me, first of all, this homework question, I'm not going to read it out for you. First of all, tell me, have you got all the understanding what we have covered today with all the description part? Have you enjoyed the class or not? First of all, let me know in the chat section. Then I'll show you the homework question. Chalo, first of all, tell me that. Maza aaya? Have you enjoyed the class or not? So company law is the only subject in which you can do this. You can cover the subject with the help of MCQs. Other than this subject, in all other subjects, you have to go through first of all the fundamental concepts, right? I'm not asking about the answer of 24th. Tell me first of all, have you enjoyed the class or not? Are you going to revise it or not? Acha, tell me that. Are you going to revise it or not at home? from the PDF itself. Okay, you will not say a word and I will not move ahead. Okay, now I am getting the answers. Okay, okay, you will revise it. Okay, that's good. Okay, chalo. Let's move ahead now. Okay, some of you are initiating the smileys as well. Okay, that's good. Chalo. So 24th question, that is your homework question. You have to comment it on the comment section after the video. After the video gets over, then you have to comment this. The non-government company, except for the IFSC company, same company that we have talked about previously, shall file a notice of appointment of auditor in the annual general meeting with the registrar within how many days of the meeting in which the auditor is appointed. So you have to file, right, with the registrar all the returns. So you have to file this as well. So within how many days? And I am not going to tell you the answer. You have to tell me the answer in the comment section. And after that, I will tell you ki you are right or wrong, right? Okay. 25th question, again a homework question. So just write it ki how much you have enjoyed the class in the comment section and then give me the answer of these two questions. Okay? Chalo. Now, if you want to have basically some free resources, so you can check out our website. In this free material, you can check the free material and blogs. Inside these blogs, you will have various categories. Select the category of SEBI Grade A and you can basically prepare for the interview from these blogs, because we have the various blogs of toppers, okay, that have topped in the previous recruitment drives. So you can basically go through whatever you find it relevant as per your requirement. You can read the blogs for free and have the understanding how they crack this exam, what is their strategy for each and every component, right? Okay, first of all, like the session, and then yeah, so you can read these blogs. Plus for the PDF, what you can do, just scroll down here now in the same page, scroll down, you will find the button of join now Telegram channel. Just click on it, you will be joined to the Telegram channel and you will find the PPT of today's class and you will have to revise it from there, right? Everyone is going to revise it. Okay, chalo fir. Finished. We are finished for now. We are going to meet tomorrow again, I think, for in the same time. Yeah, I have filled the PMS, I guess. Yeah, I have filled the tomorrow's class. Tomorrow is Monday. Yeah, I have filled that. Okay, so in the tomorrow's class again we are going to meet at 6:30 p.m. right, and we will have few more questions, few more important questions. Okay, chalo, bye everyone. If you have any doubt with regard to the today's class, you can ask me. Okay, I have started to get the answers for the homework question as well. Okay, so you have to give that homework question in the comment section after the video. Chalo, I'm ending this. Just do it right now so that I can check it now. Okay, I'm ending this class, and instantly when I have ended it, you just give me the answer in the comment section. Plus, you should also give me how much you have enjoyed the class and how much this class was useful for you, right? Okay, I'm ending this. Take care everyone. All the best.